How's it, guys? Just wanna give a bit of a help. A lot of people will have a look at a chart and be quite unsure if they must buy or sell. And my first answer to that is you must understand what your approach is going to be towards it. Um, Even if you want to be a scalper, swing trader, whatever, your higher time frames, and what I mean with higher time frames is your weekly, your daily, and maybe your 4 hour, will be able to give you a stronger bias towards what you should be looking for and identifying zones where to possibly buy or sell from. So that's the first step that you will ultimately need to do. So we can have a look at US30. Let me just clear the charts up here. This is NASDAQ. This is 15-minute or 5-minute. I use all the time frames. But I think the bigger picture is always important because it will determine your direction. So we can choose any chart we want. Let me clear everything. And then we can do a bit of a backtest session as well. But we can also have a look at the dollar index. I don't recommend everybody uses it, but in short, what I do with the dollar index is I will just want to highlight that it is possibly breaking through a downtrend and has become bullish. I did identify a bit of a demand that it bounced from, and possibly this on a higher time frame, on a weekly or daily move, this could possibly be a bit of a retracement. So yeah, I use fibs and everything. You can see a bit of reaction on 38. If you have a look at traders like, I think it is Transparent FX, you can go on YouTube, you can go look at the way he analyzes it. He does the same thing on the higher time frame and analyzes it, but you must bring in that approach just to give a bit of an overall idea what you can be expecting. For instance, like this area that I've identified, I can see it's like a resistance turn to support that is bouncing from on a weekly chart. On a swing perspective, you must understand that these things normally does wick into areas. And just to give an overall example, I just want to have a look at the notes. So the higher time frame bias is important, weekly, daily, 4 hourly. And then you must understand where the liquidity zones will sit. Now, people, if you don't understand order blocks and demand and supply, there are videos on it. But also what they call smart money or institutional money or whatever your wording is for it, there is what they call footprints. You can go and study another guy with the name of MentFX. His videos are quite complex, but he also talks about footprints of smart money. And ultimately, what you'd be able to do on a weekly, daily, or 4 hourly chart should translate into a smaller time frame as well. So my strategy is using the bigger time frames to identify zones, and then once I see it is in a point of interest, I will move it down to a smaller time frame and use very similar rules in supply and demand. For instance, if I'm biased that US30 will sell, and in this case I saw a broke of structure, and even on the daily I saw the wicks, and it just came back up and it tested that broken support level there on a smaller time frame. You'll be able to see it, and you'll see it will come back up, test it, and reject. And I mean, that's 9,500 points or 10,000 points right there that we will manage to catch. The entries is a bit difficult, so let's have a look. NASDAQ, similar story. But the concept of break of structure is important. Identifying supply and demand zones is important. The supply zone is literally the last bull candle before the movement was bearish. So you can see it comes back up to that level, and it created a bit of a gap. Thinking, everybody thought, okay, so if it's a break of structure here on the top side, we're turning bullish. But I mean, all it did was create a bit of a gap, and it pulled into it and it rejected. And you'll see on the lower time frame, it is a bit difficult with US30, but you will be able to spot that it moved from this bearish movement from the supply. It started moving down. So yeah, I can see it broke structure. There's our move. I think we caught it from there. That weak area, it came back up right to that wicks. It's a bit of a support that turned to resistance. And that little concept right there, you can also scale down to the 1 hour. And now it becomes noisier, but this area right there, we were able to identify, and in that zone you'll be able to scale in. I'm sure in the 5 minute you'll be able to spot a little bit of a what I call interruption candle or footprint, or some clue on the structure that will be able to give you a bit of an entry. So based on the higher time frame that we can see here, we actually, if you ignore the wicks, just look at the bodies of the candles, we actually never broke this high. Okay, that's the highest point, that's a swing high. But even these highs, they keep being continually lower. I think even this is higher, or a lower high is lower than that. Yeah, we broke that level, but only for the purpose of tapping into this zone over here. And you can see here, in this zone here, that is where your liquidity sits. That's where your institutional money sits, and they're trying to sell it off. And it will continue down like that. So now we're trying to identify where the people will be able to buy from. So in this area, let's have a look. This level is still a bit of a gap, and that is way down. So practically on a weekly chart, there's quite a lot of time before we'll reach that. But we can see it created a bit of a rejection over here. And if you identify where it rejected from, you will try and identify if there is another order below it. And I'm trying to see if there's anything in this zone. We'll scale down a low time frame that it might need to come retest. Personally, from my experience, these wicks, and that's why I talk about a wicking zone, is normally an area with wicks that it'll give liquidity. So I still expect this movement on a higher time frame to come down this side. To the top side, it looks like it tapped into it and is busy giving strong impulses. So even on a weekly, you can have a look at engulfing candles. That's a very strong engulfing candle right there. It went back up to fetch liquidity and it engulfed, it broke a low. So logically, my bias is sells. It's a bearish trend. The opposite would be true if it's inverse. If you start seeing equal lows and breaking highs, it will probably come back to an imbalance to this level that we can see here. But I think it has progressed to such a level here that we are going to expect just a tap of liquidity and to go down. Nasdaq will be very similar because the swing highs keep getting lower. We started seeing more or less equal lows, and I'm telling you that below these lows, that is where your real orders will sit to start pushing the market up. So you can basically, just to get a rough idea, this is what we want to be looking at. Bitcoin, I can see a very similar thing like that. I did see on the weekly, this is an interesting one, see where it reacted from is, okay, that's a bit high, but it definitely bounced off a level. I will make a video on formations for like W formations and that. There is clearly a reversal, but I still want to be able to see it do this before it'll go up. There's equal highs as well, and I think this wick over there gave a clue, and possibly I want to see it to come back down to that wick over there before it'll move up. This trade, we also saw what happened. There's a few tricks to it, but the point I'm trying to make is you must be able to identify footprints, and it's not something that is clear to the naked eye to always see. You will ultimately need a bit of a tool for you to be able to see little wicks sticking out, and what I call interruption candle and so forth. And then another confirmation is, with your bias that you see, keep your ears on the ground and read a bit of news. See what is happening when the Federal Reserve announces interest rates and what they're talking about. Normally the theme continues out through a whole term. It's not something that you will see the one moment it is, for the next day or two it's a bullish, and then suddenly it becomes bearish. The trend normally continues for quite a bit. I mean, since November last year or 2 years ago, we've been in a phase of a bearish market, and if you are able to hold a trade for 2 years, you will make a lot of money. And see how it taps into the zone. So that is a huge area to enter trades on. If you see a trade there and you are able to manage your risk appropriately, I mean, you're able to do this. There is a 1 to a 1 to 11 trade setup that I could quickly work out. This video is now about 12 minutes on. If you can do this thing maybe an hour a day, and you can put an alarm in for when it reaches an area, and it reaches a zone and you see an alarm and you just want to see the price action in a smaller time frame, and put in your stop orders, you will not struggle to be in profit. You must be able to risk appropriately, and these things will run. You can leave them for a week or two basically and just monitor what happens. As simple as that.